Hello and welcome to this video. Today I'm going to be doing a stock analysis. Hello and welcome to this video. Today I'm going to be doing a stock analysis on Ford. Now I expect everybody knows what a Ford is. It is of course the car manufacturer. Now if you do like this video, please don't forget to like and subscribe. And of course remember, this isn't financial advice. This is purely for education and entertainment. Now let's get started. Now I don't think Ford is going to be a great stock in the near future. And now why does my analysis base on this? And that is simply because of tariffs. I have recently just done an analysis that shows that 40% of Ford's imports for the auto parts are from Mexico and Canada. And well, you might not know this, but Donald Trump has put a ton of tariffs on Canada, and the Canadian government is retaliating, which means chances are it's going to be a spiral, which means even higher imports. Another reason I don't like it at the moment is simply because it is in a downward trending channel. As you can see here, it was back in July 24, it was up in 14, which is it's basically half since then, which we also see here from the earnings, which was down 26%, which is quite crazy. And ever since then, it has just been performing quite poorly. It has been very volatile for quite a while. As you can see, it increases, it bottoms out, it increases. So we see this zigzag pattern, which I don't like a lot. We don't see any real regular upwards or downwards tendencies. Also, this downward tendency, as you can see here, we have a huge gap from the candlesticks. As you can see from this one up here all the way down to this one is a huge gap, which means that the technicals in this is going to be worse, and also the fact that was an insanely large amount of sellers either before the market opened or right after it closed. Now, if we take a look at it overall and to go a bit further back in time, you can see it has also traded back in July 23, was up $15, which is basically a year before it was up here. As you can see, July 24. So we do see this tip-top pattern where it goes down, and then a year after it does that. This is quite rare to see it spiking up like this. This is more normal in other branches of stocks where they are more cyclical, and as some, of course, like some beer stocks, they perform better in the spring and the summer because people drink more beer in the summer and the spring. And our cars it doesn't really matter what time of year it is, you buy a car mostly no matter what. Now another reason I don't like Ford is because of the inflation increasing, which in the US, which is Ford's primary market, which means that chances are they are gonna see higher interest rates, which means higher interest rates on your car loans, which means less people are gonna be able to buy a car. So I don't like the car manufacturer at all at the moment. Also, given the tariffs, I saw an analysis from Goldman Sachs that said every single US car in USA would be $10,000 to $12,000 more each, which is an insane amount. Now, if we take a look at the earnings, as you can see here, they actually performed quite decent. We see up 14%, down 26%. Of course, this was the one right here where they fell. And then we see up 5% and up 14%. This was the last one here. And even though they were up 14%, they still fell. So yeah, quite unfortunate. Now, dividends on this one is actually very, very nice. As you can see, 7.7%. It is one of the best dividend paying stocks in the world. But I don't know where you live, but if you live in the US, this isn't a problem. But some other countries might have a problem as they might be double taxed. For example, if you live in Denmark, Norway, or Sweden, you will be double taxed for your dividends. So be wary about that. Now, if we look at their income over the annually, you can see some years they just don't perform that well. As you can see in 2020 and 2022, they were down. They actually lost money. Of course, we saw, and then we see this year where they had a margin of 13% in 21, which is insane. And then, of course, we see 23 and 24 being a bit more normal. They resemble probably their biggest counterpart in the EU, which is Volkswagen. But then again, Volkswagen also has a bit better margins. But again, it's not a great period for car stocks in total. Now, if you look at the seasonals over the years, let's just go back to 2010. As you can see here, Ford usually doesn't perform that great. So this isn't a stock you buy because you want to sell it for more. If you get in the stock, it's for the dividends. It is for the dividends only. So yeah, as you can see, the highest one was 143% in 2021, which is quite nice for a car manufacturer this size. And 2010 also performed quite well as did 2019. But overall, it just doesn't perform, as you can see. 2020 it was down, 23 it was up just a little bit, 24 last year it was down almost 20%, and then 22 it almost halved. So as you can see, overall it doesn't scream at you, hey, buy the stock. If you want a good dividend stock in the bottom of your portfolio, this is a great one. As you can also see, it is quite cheap, only $10, so you can get quite a large amount for quite little money if you don't have that much capital. Now, if we take a look at the technicals in this stock, as you can see for the day, it's a buy. for the month, it is a sell. However, it is a strong sell in moving averages, but still just a sell in the summary. And why is that? Well, that is simply because it doesn't really perform that well. Now, if you can see here, we do have almost a month ago today, we did see this huge drop, and ever since then, we have just not been seeing that great performance. As we see, we do have some bottoming out. It is quite evenly split between upper and down here on the RSI, but as we see more larger spans of bottoming out in the RSI, that is quite a bad thing to happen. Also, given the fact that it just tumbles down, as you can see, it is quite volatile, and we see a lot of gaps here, which means the technicals is harder to read. It's going to give some false sells and some false positives, as you can also see here. We do have some small gaps right here, which isn't great. Also, just the red candles in general are much longer, which means that sometimes when we see sell momentum, it is just crazy high, and the small green candles means that the upwards momentum is being killed by sellers or shorters. So, not a great stock at the moment on the technicals either. Now, the analyst rating on this is negative, as you can see here. 1 year price target is minus 1.8% average. As you can see, we have someone who are very positive, is saying it's going up to $15. We have 4 strong buy, 2 buy, 16 hold, and 3 strong sellers. Now, the reason I think there's so many holders in the stock is because, of course, Ford is a renowned company in the car world, and they have great dividends. So holding the stock will most likely gain you more money than selling it. So yeah, if you do the math, if you get 7% each year, it's gonna take 10 years to double your money. So yeah, it's gonna double your money even faster because it's 7.7%, and of course we do have a snowball effect, so this should be about 6.4 years. It should double your money if you reinvest into the stock, and they maintain their dividend, of course. This is very important. They can't reduce it by that much, otherwise, of course, the math doesn't check out. So yeah, not that great analyst rating. If we look at the annual, as you can see here, we can see their guidance, as you can see, is falling in 25 a bit. It's actually falling almost half a dollar. And then in 2026, it is getting a bit better until 27, and then 28 is a bit lower again. And the reason why car manufacturers do up and downs like this is because we do see some years more cars sell because people need to, of course, get new cars. So we do see some cyclical in this type of stocks, but of course, it is over years and not over years. No, I mean, not in an entire year. Example, as I mentioned earlier, beer. Some years, sometimes your beer sell more. For cars, you have to look at more years. So let's say I buy a car in 2020. Chances are the next year I'm going to buy a car, it might be 25 or 26. So that is the way they can calculate. Just see when was the last year they sold many cars. And I'm betting that was in 2021 or 22. As you can see here, 27 is quite nice. So that might be for the 2021. We did see great car sales in 22 and 23 also, but I think they were a bit less guiding a bit less also just because of the tariffs in total. So yeah, overall, not very happy with this stock at all at this time. So yeah, if you did like this video, please don't forget to like and subscribe and comment any other videos you want me to make.